we are. We're seeing that most Fed officials favored deferring asset sales for some time. We're also seeing that a few on the FOMC wanted to start asset sales quoting here relatively soon. Some of the other headlines we're seeing, the Fed says that 2010 inflation to rise less than predicted, and also the Fed keeping the 2011-2012 growth and jobs forecast. Little change. Julie, a lot of headlines moving at this hour.
Well, and one key moment from the Fed statement that we want to highlight in particular, and this is a quote, "In addition, nearly all members judged that it was appropriate to reiterate the expectation that economic conditions, including low levels of resource utilization, subdued inflation trends, and stable inflation expectations were likely to warrant exceptionally low levels of the federal funds rate for an," wait for it, extended period, folks. So extended period, it looks like most of the members of the Fed were still favoring that language. Our Federal Reserve reporter Scott Lanman is in Washington. He's been poring over the document, looking for the less obvious standout. So we just talked about that one highlight, Scott. What's the significance of it?
Well, there's really nothing to indicate here that the Fed is going to move anytime soon on either asset sales or changing that extended period language, which would then be a precursor to actually raising interest rates from record lows. There's actually an interesting line. They said that most members projected that economic slack would continue to be quite elevated for some time. And there was also lowering of inflation projections for the next 2 or 3 years in their forecast. That's all a signal that they're really not excited about moving anytime soon, that they're not ready to move on asset sales either, and that there's a wide range of debate over asset sales that indicates they're not near consensus.
And Scott, in your story that I'm looking at on the Bloomberg, the policymakers saying that they were in no rush to sell $1.1 trillion of mortgage-backed securities, a majority preferring to wait until after the central bank starts raising interest rates. What's the significance of that?
Well, according to our survey, the Fed isn't going to raise interest rates until at least the fourth quarter, and some people think it could be even later than that. That means it's going to be a while before they do that. Other parts of the debate centered on at what pace they're going to sell these assets. A lot of people wanted to do it in a 5-year time frame, but a smaller number wanted to do it in only a 3-year time frame. That would be the aim of returning the Fed's balance sheet to where it was before the financial crisis, so to get rid of these $1 trillion in assets they've bought, so there's less of a chance that it causes inflation in the economy.
Well, and speaking of inflation, Scott, what are some of the other comments that the Fed made in the discussions around the question of inflation?
It seems like they're still expecting inflation to stay very subdued for the next couple of years. Even though some indicators might be pointing up a little bit, the majority of folks don't seem to be too alarmed on that front yet. There is still a smaller number of people who think that there are higher risks of inflation from the balance sheet or from commodity prices in the economy and those sorts of things.